As a Section 8 landlord, there are plenty of tax deductions you can take advantage of. And if you're not using them, you're literally leaving thousands of dollars on the table. So, in this video, I'm going to break down the top tax deductions that smart Section 8 investors take every year to protect their income and boost their bottom line legally. Welcome back to the channel where I help you build consistent government backed cash flow through smart Section 8 rental property investing. And I'm Moses the mentor. And if you're trying to keep more of what you've earned in this business, then taxes are going to be a big part of the conversation because tax strategy isn't just for millionaires. It's for landlords like you and me who treat this like a real business. So let's talk about the basics, right? So here's the deal. The IRS treats rental property investing as a business. That means just like any other business, you'll get to deduct legitimate expenses that are ordinary and necessary to run your rental operation. Now, I'm going to walk you through the most common tax deductions that every Section 8 landlord should be taking advantage of. And yes, these apply even if you have one property, right? The first one is mortgage interest, right? So let's start off with the big one. So, mortgage interest, if you're financing your rental, is the interest portion of your mortgage payment that is fully deductible. So, if you're paying $1,500 a month and $400 of that is interest, you're able to deduct that $400 each month 12 times. You do the math, right? This is one of the largest deductions that you'll likely take as a rental property investor. Number two, property taxes. So, federal tax law allows you to deduct the rental property taxes on rental real estate. This one's simple. Whatever you pay the county or city in property taxes, you can just write it off. Number four, repairs and maintenance. And this one is big for Section 8 landlords because this is what we do, right? So we're talking about things as simple as fixing a leaking faucet, repainting in between tenants, patching drywall, servicing the HVAC. All of this counts, even small things like lock changes, outlet replacements, or even pest control can be deducted. Now, quick tip. Capital improvements like replacing a roof or adding a new HVAC system can't be deducted all at once. Those need to be depreciated over time, which leads me to number five, which is depreciation. This is the silent wealth builder most landlords overlook. Depreciation lets you deduct a portion of your property's value every year on paper without spending any actual money. The IRS lets you depreciate residential rental property over 27 and a half years. So if your rental, not including land, is worth $275,000, you get to deduct $10,000 per year every year just for owning it. That's massive. Number six, utilities. So if you pay for any utilities or any part of utilities, even if it's just water or trash collection, that's a deduction. So if your lease includes water or sewer, or you're covering utilities overall during a vacancy, track those bills and deduct them. Number seven, travel and mileage. Yes, you can deduct travel expenses related to your rental. So if you drive to your property for inspections, showings, repairs, or to meet housing authority staff, right? Log those miles. And if you're out of state like me and you have to fly to your market, you definitely want to track those expenses as well. The IRS gives you a standard mileage rate deduction, right? So you just got to check your current year's rate, or you can deduct actual expenses like gas and maintenance if you prefer that method. And that's the one I typically go with. And if you're investing out of state, just remember again, your flights, hotels, and rental cars all are potentially deductible too, as long as the trip is for business. Just make sure it's for business, right? And you'll be fine. Number eight, professional services. So if you pay for a CPA, a bookkeeper, legal advice, property management, which I don't recommend paying for property management. You can manage it yourself, but hey, or even software like Hemlane, right? And that's what I do recommend, to take some of the practices that I teach and then use a property management software to kind of help bridge the gap from tracking and communicating to your with your tenants. So if you use any of that, right, that's a tax write-off. That is a tax write-off. So these are costs you incur to operate your rental business and to make it efficient and also legally binding. So that's the cool part. All that stuff can be deducted. Number 9, marketing and advertising, right? So if you have a Zillow listing or you're paying for any type of advertising for your property, just know that that is deductible. If you went to Office Depot and printed up some materials, that's deductible. FedEx office, whatever the case may be, anything to market your business is tax deductible. So that's a huge win. So if you're paying to find tenants, it's a business expense. Do not forget that. Number 10, the last one, which is super important, right? Education and training. So if you invested in a mentorship program, online course, or attended like a real estate conference, those costs can also be deducted as long as they directly relate to your rental business. So if you join my Section 8 investing program or watch paid webinars to get a better understanding of the game, keep that receipt. It counts. So none of these deductions matter if you don't track your expenses. So make sure you're using a good accounting software, you're keeping your receipts, and you organize everything so that your year-end file looks pretty good when you hand it over to a CPA, right? And they don't have to chase you down and ask you a million questions. So if you're building cash flow today, real cash flow today as a Section 8 investor, or you're an aspiring Section 8 investor, you're in the right place, right? And I just want to tell you, make sure your tax game is just as strong as your tenant screening or your rent collection process, right? And I cover all of this plus more, including deal analysis and inspections and how to actually, be successful with all of these things in my free training. All you got to do is go to mosesthementor.com and you can get access today. If this video gave you any clarity on how to actually navigate tax deductions, go ahead and like the video, share the video, and subscribe to the channel. I really appreciate it, right? So stay committed, stay profitable, and I'll see you on the next video. Peace.